at a special price. So today I'm very excited to get into this topic. Now, for those of you who do not know me, my name is Hayes-Burke. I'm also known as the Vision Builder. I'm a vision strategist, business coach, and consultant. And for ease of reference, I have placed in the chat my bio so that you can have more information about me. So let's get right into this topic. And of course, if you do have questions as we go along, what I would invite you to do is to use the chat feature if something pops into your mind for you to ask a question. You can drop it into the chat, and thereafter I will be able to address them. We will have our Q&A segment at the end of this conference and at the end of this seminar. So let's get right into it. Today we are talking about taking the emotion out of your pricing. Now, I want you to take this idea and hold on to it as we go through this journey. Before you can price for value, you must be able to price for profit in your business. Before you can price for value, you must be able to price for profit in your business. Now, this is a very important point. At all times, as a business owner, you must know what it costs you to run your business. So my question to you right now, and I want you to ponder upon this, do you presently know how much it costs to run your business? Do you presently know how much it costs to run your business? Because the truth is, and I go back to my previous statement, at all times, as a business owner, as a micro business owner, as an entrepreneur, it is critical, it's imperative, it's important that you know how much it actually costs you to run this business. More so in times like the ones we are presently living in, recessionary times such as these, it is absolutely critically important. You have to know your numbers in order for you to be adaptable and strategic in your business, which is why this conversation about profitable pricing strategy is essential. So as business owners, what I've recognized is that especially at the starting stages of your business or when you're in that micro business stage, you tend to love the passion side of your business, but you often struggle with the business side of running your business. And one of the areas that I've discovered is of the greatest emotional distress for many entrepreneurs is the area of pricing. So in this session, in this room, we are going to get down to the basics of profitable pricing. And I'm going to share with you 4 key things that I need you to consider to get your pricing right. And as I said, when it comes to times like these, where we have circumstances relating to inflation, recession, rising costs of living, etc., it is imperative that we understand how to do this. Because before you can price for value, you must be aware of how to price for profit in your business. So I'm going into the 4 key things, the 4 basic considerations you need to have if you are going to have a profitable pricing strategy and structure in your business. The first thing goes back to my initial introductory point. You must know how much it costs to run your business. And I need to say this for everyone in the room who is listening live or who may be listening to the replay. Regardless of whether you run your business from home or you run your business from a physical location, regardless of whether your business sells products or you sell services, there are costs incurred in running your business. That's the first thing that I want you to remember. And these costs look like overheads. There are overheads that are involved or incurred when you are running a business. And I've often found that particularly those persons who run their businesses out of their homes or run virtual businesses, you often negate the fact that there are overheads. The overheads look like your internet bill, your telephone bill. Those things are involved, are overhead costs for running your business. Your website is an overhead cost. While you may not have a physical location, your website is the physical location of your business. It's physical in a virtual sense. So it's imperative that you pay attention to your overheads. What are your overheads? Do you know what your overheads are? That is essential. In fact, for some of us, we have made the critical error of not paying attention to the many subscriptions that we have being charged to our credit card that are actually business expenses. Because without your business, you would not have had that subscription. So it's in times like these, it's critical for you to pay attention to your overheads, your operational costs. That's the other part of running your business. Now, I've found that with entrepreneurs, micro business owners, because you tend to wear many hats in your business, you are administrator, you are the marketer, you are, you are the courier at times, because you wear many of those hats and you do it seamlessly and flawlessly, you do not take into consideration that there's actually a cost to doing that. And the reason that this is important is because you're not building a business for where you are now, but you're building a business for where you're going to. And where you're going to is actually going to be a space where you are trying to bring on staff to assist you with some of those operational activities. So a key part of your pricing is to incorporate into your original pricing a percentage, a value that covers work being done in administration, work being done in marketing, work being done in logistics, or whatever other areas of your operations that are essential to getting the job done or to provide value to your clients. Final thing that I'm going to say in the area of cost of running your business, you need to ensure that you are projecting for your taxation. We pay taxes, guys. And sometimes our taxes are an afterthought. And because they're an afterthought, even though you are making money in your business, because you did not anticipate or compensate for taxation in your pricing structure, when the tax time comes and you have to pay, you are using your profit margin to pay for your taxes. And suddenly your bank account doesn't look as great as it's supposed to look, even though you have a high volume of sales or even though you have consistent clients. So the first point, when it comes to pricing for profitability, you must know how much it costs to run your business. The second thing that you need to know is how much do you want to pay yourself? I recall, and I don't know if anyone in the room has this experience, you can let me know in the chat. I recall that when I first started my business, I was told that I will not be able to pay myself and that I will not really be able to pay myself for the first couple of years in my business. Now, as someone going into business, someone who studied business, and someone who also had a professional career building strategy, my brain said that doesn't make any sense. When I had those conversations and I further asked questions concerning it, what I recognized is that they did not cater to pay themselves through their business and their pricing. You see, at the top, for those of you who came in late, I mentioned that in business, you often have a lot of emotional turmoil, right? And a lot of the emotional turmoil surrounds pricing. So what they were doing, those individuals who told me that you won't be able to pay yourself, what they were doing is that they were pricing according to how much they felt they should charge. And that feeling included the thought or idea that you will not be able to pay yourself. So I'm here to let you know that even if you are building a business alongside having a career, it's critically important for you to start thinking to yourself, how much do I want to pay myself? And here's a little caveat, here's a little tip, here is something that I want to share with you that I hope that you will hold on to. Even if you are employed, I would like you to, at the very least, cater to pay yourself minimum wage. I know this sounds like, what? Minimum wage is so beneath what I typically I get paid in my career. But even if you are emotionally struggling when it comes to paying yourself, you cannot pick a number out of a hat. If I were to ask you, how much do you want to pay yourself? You are challenged to say, how much do you want to pay yourself, right? Here's what I want you to do. I want you to, at least give yourself minimum wage per hour. And 2, at least give yourself a minimum number of hours that you work in your business for which you would like to be paid. A minimum number of hours for which you work in your business that you would like to be paid. The combination of minimum wage by minimum hours is going to give you the minimum amount that you should pay yourself. That's just a small tip for those of you who may be struggling with, how much do I pay myself? That's important. Okay? So you need to decide how much you pay yourself, because unless you put a payment for yourself in there in your pricing, guess what? You'll never pay yourself because it has never been included. The third thing that I want you to do is to set your prices, divide those costs and that payment for yourself by the minimum number of clients and customers that you think you can have, or you are likely to have when it comes to your business. And I say price for the minimums, not the maximums. Here's an error that I've seen many persons make. Now, of course, we think positively about our business. Of course, we think about the highest level that we are going to reach. We think about the maximum number of clients that we want to have. But the truth is, in business, you don't always hit your maximums. The truth is, in business, in the buy-up cycle and the process, what happens is that there are times that will be peak times for you, and there are times where you will be in your non-peak times. When you price for your peak level of sales, in the months that you do not experience that, you will never have the income coming in to actually cover your expenditure. So when you price for your maximums and not for your average or your minimum, what's going to happen is that you won't have enough money from your sales to cover your operations on a monthly basis. So the way to get out of that, start pricing for your minimums. Price for your minimums. If you are certain that in my business, I will have a minimum of 2 clients or 2 sales per month. It doesn't matter whether the month is January or the month is June or the month is September, like we're in right now. If you know that to be true, then this is what I want you to do. Divide your costs and how much you want to pay yourself by your minimum, not your maximum. So what happens when you set prices for your minimum? 1, at the very least, you will always be able to cover the cost of running your business and pay yourself something. 2, in the months where you have exceeded those minimums, those amounts are mainly profits that you can now experience, and those profits can accelerate the growth of your business. And 3, you will always know how to flex your pricing, how to flex your ability to provide discounts, promotions, etc., because you know the minimum number that you need at full price before you can do anything fancy with your marketing promotions. Numbers make all of the difference. So always price for your minimums. And then the last point that I'm going to share with you is once you have decided your minimums, once you know the cost of running your business, once you know how much you want to pay yourself, then you are able to set your markup for your goods or services. So the mistake is that many times, especially if you're in a product-based environment, you think I paid this amount, this is some of the other additional costs that were incurred in getting this product, and I'm going to add a markup. You never add the markup on your operational costs and those things. So again, your profit now goes into paying your bills, right? Once you have done all the first three steps, the third step is to decide on your markup. My recommendation is that your markup should be anywhere between 15 to 25%. And that's a general rule, case by case basis, depending on the nature of your business. You may find that your markup is lower. For instance, if you run a retail store or supermarkets, for instance, their markups are always lower because they are working off a model of maximum number of sales, right? Most of us as micro entrepreneurs, as micro business owners, as small business owners, most of us are not necessarily doing maximum or volume-based design. So you want to ensure that your markup makes sense. And this is where also conversations relating to inflationary rates that we are dealing with now should also inform your markup and should also inform your costs running your business, because when you see a certain inflationary rate, you have to project a bit to determine what is going to likely happen in the next year or so, right? But even if you don't project well, even if you don't have the capacity to project well, your markup should be able to help you to still navigate times like the ones that we are in. So just to recap, the 4 basics that you need to think about when it comes to your pricing for profitability. 1, how much does it cost to run my business? 2, how much do you want to pay yourself? 3, what is the minimum number of clients or customers I will have each month? And 4, what is my markup on my product or service? Now, once you apply these principles, these basics to your pricing, the reality is suddenly you're now going to have a business that is able to pay you, to pay for itself, and to give you an income buffer that you can grow your bank account, you can make investments, etc. So here's the benefit of using this as I conclude. The benefit of doing this is that, 1, once you understand once you approach this in the way that I've just described, you can use your minimum pricing strategy to always make a profit, right? So once you know where your profit lies, you will always make a profit in your business. You will always be able to pay yourself something, and you will always be able to apply something towards the business paying for itself. 2, once you understand the minimum pricing that gives you a profit, then you can add pricing for value. And I'm certainly going to do another talk on what value pricing really is, but you've got to first know your profit level, your pricing for profit level, before you can add pricing for value. So then you are certain that the value premium that you add on your pricing is giving you what it's supposed to be giving you. And thirdly, when you use this approach to your pricing, you are going to be able to ride through a little bit more seamlessly the ebbs and flows of times like we're in, that has increasing inflationary rates, increasing costs, etc. You are going to have a bit more of a buffer, a bit more of a solid foundation that is going to give you staying power when it comes to your business. So I'm going to allow you, if you have any questions for me, you can use the chat, or you can raise your hand and come up on stage. I'm going to take one person on stage at a time. So if you do have any questions or any comments that you wish to share from this session, please feel free to do so. And while you are doing that, I want to remind you that what I've shared with you, I have taken and written a workbook, an ebook workbook that is going to help you go through this process of pricing for either your product, your service, or your program. There are 3 sections in this book. It's pricing for products, pricing for services, and pricing for programs. So if you know you've been struggling with your pricing, you can go to the link above. It's at a discounted price today, and you will be able to purchase this book. It'll be directly downloadable to you. You can print it time and time again and reuse it to price at any stage in your business.